But how will all of this overnight cues impact the Indian markets? We have our research team joining in with the trade setup, the stocks that are likely to be in focus as well. First up, Vivek, good morning. How is the market setup looking like? Yesterday it was Reliance that took the indices higher, but the cues from the global markets are completely flat.
Good morning, and first up, absolutely nothing to complain about in terms of how the Indian markets are poised. We are sitting at all-time record highs. Mid-cap, small-cap indices too. In fact, if you look at the kind of trend that we're seeing, up for 11 and 12 trade sessions respectively each. Like you mentioned, the global markets absolutely flat overnight. In fact, the Dow Jones and S&P 500 marginally below the flat line, while the Nasdaq ended marginally higher. So, nothing to take out as far as the global market action was concerned in terms of equity market action. Now, coming to oil prices yesterday ended with marginal cuts. Today, they're back up, in the green territory. So, WTI hovering around the $86.5 a barrel mark, and Brent little above the $90 a barrel mark. So, that continues to remain a key parameter to track. Now, coming to the Indian markets yesterday ended at record high levels. Mid-cap index, like we mentioned, yesterday gained for the 11th straight session. So, it will be interesting to see whether that particular trend can sustain today, or we may see a bit of a pause as far as that particular rally was concerned. Remember, yesterday intraday we did see a sharp dip in the mid-cap index, causing significant volatility as far as the put option was concerned in the mid-cap index itself. So, today we'll have to watch out for any volatility in the broader end of the market. So, when you're talking about what outperformed, the auto and the realty index was something that outperformed quite significantly. And yesterday, in the broader end of the market, there was some significant outperformers. So, names like Exide, Voltas, and Info Edge, all of these stocks, saw strong price action backed by good volumes as well. What is it that markets will be watching out for today? Number one, a very large block deal in Axis Bank. It's a clean out trade from Bain Capital. And the other one, of course, is Gland Pharma. Asian markets, GIFT Nifty, both indicating, a mild start for our own markets.
Thanks a lot, Vivek, for joining in. Next up is Sudarshan, who will tell us the stocks that we need to watch out for in today's session. Morning, Sudarshan. What's on your list today?
Morning, Horma. So first, I'll start with the biggest stock of the day, that is Axis Bank. Bain Capital is likely to sell up to 3.34 crore shares via block deal, and offer size $431 million. And offer price for the book is in the range of 1,071 to 1,076 per share, which is at a discount up to 0.5% to closing price of Monday. Next is Gland Pharma. Nicomec Machinery and RP Advisory Services likely to sell up to 4.4% equity, and floor price for the same is rupees 1,725 per share, which is at a discount of 7% to Monday's closing price. Next is General Insurance Companies, which has given quarterly updates and monthly updates. First, ICICI Lombard. March premium was up 18% and Q4 premium was up 22% year-on-year. New India Assurance, March premium was flat, but Q4 premium was up 2%. Star Health, both March premium and quarterly premium were up 18% each. Tata Motors, JLR has reported Q4 and FY24 sales. JLR Q4 wholesales were up 16% year-on-year, and retail sales were up 11% year-on-year. Company says sales reflect improved production and sustained global demand. Next is NCL Industries. Cement production dispatches were up 4% year-on-year in Q4. Sula Vineyards has given quarterly updates. Net revenue was up 10%, and wine tourism was up 31% year-on-year. UCO Bank has given quarterly updates. Deposits were up 5.6% year-on-year and 3.7% sequentially. Advances were up 15% year-on-year and 4.5% sequentially. Last is STL. Sources say company has launched QIP, and issue size for the same is rupees 1,000 crore, and equity dilution via QIP is likely at 22%, and indicative price for the same is rupees 113 per share.
Plenty of stocks to watch out for, as always. Thanks a lot, Sudarshan, for joining in. And lastly, Nigel is joining in with cues from the F&O space. Nigel, good morning. 22,600 conquered now. And what's the next levels that you're watching out for this morning?
Well, it appears his market wants to hit that 23,000 odd mark, and the base seems to be shifting up from around the 22,200 around 22,400 odd. Now, in yesterday's trade, you had the Nifty that did pretty well. But the mid-cap index was a bit of a relative underperformer. Keep in mind that there is a futures contract as well that does trade out there, which is the Nifty Mid-Cap Select. And that could be because of the expiry-related factor that we did see an underperformance to the mid-cap index. And I say that because yesterday on an intraday basis, you have Indian hotels that moved closer on 8-9% between the low and the high of the day. And that has the highest weightage on the mid-cap index. So just keep that in mind. One factor of that underperformance could be because of this move on Indian hotels and because of the expiry-related factor that played out there. Moving to what the FIs did on the index futures. Well, in yesterday's trade, they added more than 10,000 long positions, and that takes their long position to around 45%. Though net-net, they still continue to remain net short with 55% of the positions on the short side. The encouraging part now is the 22,500 put that got written very, very aggressively in yesterday's trade. That gives you the sense that, in fact, the bulls, they believe the base has moved up. And the 22,500 call, well, there was aggressive writing earlier. Those bears, well, they packed their bag. They said, let's get out of here. It appears the momentum is against us. So that was an encouraging sign. What are the levels you're looking at? Since the 22,500 put was getting written, 22,450 becomes the first reference point. And the next one is the 20 DMA. So it's an uptrending market. Those are the two crucial factors. On the Nifty Bank, yesterday's high becomes the near-term resistance that we're talking about. And since the 48,500 puts saw a fair bit of addition, the premium is roughly around 200 rupees out there on an average. So that's why I'm saying the 48,300 mark becomes a bit of a reference point on the downside. Today, we'll have the Nifty Financial Services Index that will play out expiry. So that's another factor that you should be tracking. Let's see how we go from here. But this market wants to test the 23,000 odd mark. Back to you.
23,000 now on the Nifty. Next up, always bringing encouraging signs every morning is Nigel. Thanks a lot for joining in. And as we